And we're live. I'm live solo. And let me make a quick post. Yes, send. Okay. Here we go. Let me also pull up the live stream over here so that I can read some of the chat on my phone while I share my screen over here. But welcome. I just wanted to go quickly live today to jump into some of our DeFi stuff that we haven't had a chance to touch on in the last few last week at least, since I was that sick with COVID. What's going on, Random King? Let's see. Let's see if I say hi. Does that show up in my? Oh, it does. Nice. Okay, so I got Carlos Zagato. That's just me. All right. Here we go. Let me start by sharing my screen. I am going to swap over to my web screen. Here we go. Hide some of these lines. Let's hide also the volume indicator. And let me start off checking out. Oh, how did I do on Sunday? I did pretty good, Random King. I won first place. My topic was pretty good though. The louder the fart, the smellier. And then it's just, I don't know. It was a fun time. The other two guests were really great. It was the Drawn Company, and it was oh man, I gotta be better about names. But it was the person who we always recommend for delegating your voting rights on Wax. She was great. She had the best arguments, I'd say, but I feel like she didn't bring the confidence that she needed to get the crowd on her side, although she pretty much had it. Yeah. Elsie, that's her name. That's right. Yeah, she was great. She had really good points, but I feel like the showmanship was kind of my strong suit on that debate. But it was fun. Let's see. Elsie. Yeah, Elsie, she's great also just in general as far as like a Wax community member or like community leader, I'd say. She's who I delegate my votes to when I'm voting on Wax. She's my proxy and the person I always recommend as a proxies. She's super clever. Her counterpoints were also really solid. Like I was doing my thing as like pseudoscience, and then she came back with like actual science. Which I was like, oh shit, I'm gonna get it. But yeah, it was fun. I'm glad people came and voted for me because I feel like she definitely had better points than I did. And yeah, it was basically it came down to just the like I was talking out of my ass a little bit better. But yeah, it was really fun. She definitely BDA also brings like the energy, so it was just in general it's a fun stream, like very fast pace, everything kind of like moving. So it was great. I also feel like I went over a couple times with like my time allotment just because of how fast paced it is and how I'm like more used to me and Lewis just kind of like shooting the shit a little bit less structured, not like sticking to 1 minute or 3 minute time limits. Talking on my house, it definitely helped with the fart topic. So it was a good time. And then yeah, it was fun. Also, I really like the guy from Drawn Company. He always has like just like a fun energy, and it was fun. It was just a fun panel to be part of. But yeah, today I just wanted to go quickly. Lewis is on set. He posted some pictures in Discord of he's shooting something at UCLA, I think. But I do want to take a second to look at what we have on our Wax wallet and take a look at how that's going, just because. Oh, hold on. Is the worst. NFT funny guy is the worst handle ever. I don't know. It was pretty fun. What's going on? Yeah, it's definitely yeah, I don't know. His points were really fun too, but I think he did kind of like focus a little bit too much on like a specific aspect of his like for his argument. So that opened up a little bit more of a leeway for the counterpoints, which was fun. But in general, that show was fun. I'll have to tune in next time BD does that and just see what other people do and how other people argue their ridiculous points. I think the next one's like end of the month, right around Halloween. So we'll have to see how that goes. But yeah, before we yeah, I mean that was just fun. But like I was saying, Luce isn't here today, so I'm trying to do a little quick solo thing. I want to keep it relatively brief, I guess, contained. But what I'm going to do is start by looking at it's kicking me out. Start by looking at some crypto markets and see what's going down this coming week and how we want to structure our wax position moving forward. Let's see. What up, Dre? What's going on? But yeah, let's take a look really quick here at the so I have this is the Ethereum market pulled up right now on the daily chart. We've been kind of selling off, pushing down here, sticking below our strength band there on the red. And if I go into the weekly chart, you can see we're also starting to flip. Let's reset the chart view. We are starting to flip the trend and pushing down here some more. Although we are running out of SRSI, so stock RSI is a little bit on the oversold side. But it looked like on the daily, we have quite a bit of room down still. And we'll have to see. Actually, you could check the monthly as well, just to get kind of a general sense. And you can see on the monthly, the SRSI is starting to change momentum down and also has plenty of room. So definitely looking a little bit bearish here in the coming weeks. So if we go back to the weekly, it looks like the weekly is getting close to print here for a bull or for a flip from bull back to bear. And since we're already on the red side of this B bands or of this strength band rather, it's probably going to continue to push down. That's also kind of enforced by the DXY this week. So you can see the DXY, that's the US dollar. It did kind of break up out of our, let's see if I have my channel drawn here still. Yeah, it broke up out of the channel, then retested kind of the top of the channel and is now pushing up. This is the US dollar. So as the US dollar gets, stronger, generally speaking, we're talking about the equity markets losing strength. So stock and crypto markets probably selling off as the dollar keeps rising. And if we look at the dollar on the monthly, it really paints a bullish picture where you can see we've actually bounced right off of this. We're still in the green and then, way on the oversold side still. So lots of room in the monthly to kind of like cool off the RSI, continue to push up here, and probably retest the top level of where we pumped to previously, which if we look at the monthly, this kind of a pump here is going to coincide relatively well with like the SPY dump. So yoink, this like dump, and now we're coming back up, and you can see DXY in a similar timeline there, having its aggressive like peak happening right around the same time as where the valley was in the stock market. So around here is where we're seeing the bottom of that. And since the stocks started climbing back up since then, you can see we also have the stock market kind of making a lower high. So not really repeating the all-time high that we had here. We're also seeing, we're still on the monthly right now, so I can actually go to the weekly, get a little bit closer of a sense here. But you can see stock market did kind of like a whole retest here, but making lower highs, definitely lower highs on balance volume. So still kind of overall bearish trend. And it looks like we're finally kind of like pushing back down and selling off here. So again, we're right at the line looking for a bounce, but likely if we do bounce, you got this line that I've drawn here, we'll probably only bounce back to here before pushing down and then falling below and pushing back into, old bear market kind of trends. So general market is starting to look pretty bearish again. Here you can also see, Bitcoin didn't actually make that retrace that the stock market made. So not quite as nice of a recovery as we saw in the SPY, where we would have seen Bitcoin otherwise kind of climb all the way up to here, or this is Ethereum. It barely made it back. Also on balance volume, not really coming back, kind of flatlining recently. So if we look at it from here, let's zoom in a little bit and frame it from like the bottom of this initial sell-off to here. This is still relatively flat, so it's not really climbing. This is also kind of climbing, kind of flat, not really that exciting. And as we know, the crypto market tends to cycle based on the halving events, and the next halving event isn't until next year, April or May or so. So it's going to be a little while before we get kind of a catalyst in these markets again for the next bull run, if we're going to stick with that kind of a cycle that's been going on. Another thing to note, though, is that the cycles have happened to date have all happened with interest rates being relatively close to zero on a federal level, so money being relatively cheap, and people therefore having a bigger appetite for risk assets like cryptocurrencies. And so now we're actually getting into the last week was the FOMC meeting. Last week Tuesday, that's where the Federal Reserve decided on raising, or rather this time they decided to maintain the interest rate where it is, so it's staying at 5.5%. And they also kind of were saying that while they aren't increasing interest rates on a federal level, that this time around they are anticipating not lowering those levels as quickly as they initially intended to lower them. So the kind of takeaway from last week's FOMC was that the interest rates on a federal level are not increasing anymore, but also not going to be decreasing as quickly as they kind of were expected to. The decreasing of federal rates obviously making cash cheaper again, and then making risk assets a little bit more accessible. So let me read a quick comment here. Yeah, I'm not going to want to risk at high interest, exactly, because that's exactly the thing, is Bitcoin and cryptocurrencies, relatively high interest, relatively high return. But when you speculate on something like that, especially using margins or using cash, even if it's not borrowed cash, the cash now has options for you to lend it out or for you to earn relatively high interest, comparatively high interest to what it was available before, without the risk of using a high risk investment vehicle like a crazy volatile stock or crypto asset. To text on new money, yeah, exactly. So you see quite a bit of I would say quite a bit of money now moving off of equity holdings into cash again, as cash kind of has all this interest bearing options, where it's pretty easy now to make 5-ish, maybe 6% on liquid cash that you just hold in your FDIC insured bank accounts, whereas it's becoming at the same time relatively difficult to make 5 more percent in some of these DeFi marketplaces now, reliably, on stable coins. And so then it's well, why would I put my money into a much more risky asset like stable coin when I could just hold it in US dollars at the bank account and make the same returns? And so you definitely see a decent outflow of liquidity from the crypto markets, as the Federal Reserve makes cash holding a much more attractive prospect moving forward. So all of that said is kind of painting a picture of we're moving relatively quickly here into a bearish trend again. The daily chart is absolutely kind of starting to look more and more bearish. Let's jump really quick over and look at Wax directly. So Wax, recently is kind of pushing up here on the daily, closing a little bit above our band here. So we'll have to see if it falls here and bounces to kind of push up, or if it falls and keeps moving down. Although I do expect that Wax is going to move like it always does with the remaining crypto market, and therefore is probably going to continue to push down if crypto sells off. What's going on, Monasuerte? I'm looking at my chat right here on my phone. So trying to drive the stream here without Lewis or anyone else around. But what I want to do is take a look at how our Wax DeFi investments worked out since last week or 2 weeks ago now, and see what our positions are and how we want to maintain those or maybe adjust those to participate in the potential falling value that we're seeing coming kind of our way here. So first thing I want to do is let's take a look at Alcor. On Alcor, we have still, looks like our liquidity is still in range here. I'm going to pull this up. So in the last 2 weeks, we have earned a few cents worth of yield. I'm going to claim that yield. So that'll reset for next week. And then let's take a look. It looks like I have a range down to 3.3 cents and all the way up to 8 cents. And if I go back to our chart here for wax, 3.3 cents is actually pretty close to like where this daily chart kind of found some support here. So 3.4 or something right here. So that's not a bad spot to keep the bottom end of our liquidity pool. 8 cents might be getting a little high now that 8 cents is, way up. Oh, wait, that's 6. 8 cents is way up here. So what I might do to kind of target the liquidity a little bit more aggressively is keep our bottom target down here, but maybe set our upper limit to kind of, maybe the top of this like body of these candles, which is, what is that? It's about, it's a little under 6. So let's just say 6 cents instead of 8 cents. That way we can concentrate the liquidity in the LP a little bit more tightly to the current spot price and, own a bigger share of the pool to give us a little bit more yield here versus what we're currently earning. Right now, with what we have in the pool, you can see we own 0.06% of this. So let me remove that and then re-add the same amount of assets, but with a different range. And we'll see how much, if we can increase our holdings in this pool. So that'll be the first thing I want to do this week with this position. Let's start here. There's that. I'm going to set, again, 3.3 as my low. Oh, there we go. 3.3 cent as the low range. And then the upper range, instead of 8, let's go to 6. So now we've tightened that range up quite a bit. It's going to actually require a little bit more of a counterpart here than what I have. I have 1.8. So I actually do want to adjust my counterpart a little bit. I'm going to buy a couple USDT to add this counterpart like that. So I'm going to buy maybe $1 worth. So first thing I'm going to do is jump back over to the swap and we'll do $1 worth of USDT. And that's going to be, let's see, $1 is what, like 25, 24? Let's see. I think 24 will do it to 97 cents. That's close enough. Oh, and before I buy this one, let me double check quickly on Wax on Edge to see if I can actually find a better deal for USDT. So I'll go to swap now. I think we're already signed in. Oh, no, that's first. That FTW. The glare at this time of day is amazing. So I'm having a hard time seeing my screen a little bit. But let me pull this up. We're signing in with our DeFi wallet. And then let's see if we do 24 wax into USDT. Let's see if we can get a better deal on DeFi box. Or I'm sorry, on Wax on Edge. USDT. That's the one. All right, let's let that load. And let me double check what am I getting over here. 96.88. And over here for 24, can we do better than 96.88? Let's see. It's going to think about it. Wax into USDT on Alcor, 96.88. So it's exactly the same. So I guess it doesn't matter where I do the swap. So I'm already on this page. Might as well use this page to swap. Done and done. And now I can go back to pool and we'll go back and set this range that we wanted, which was 3.3 cents up to 6 cents. So now that we have a little bit more wax there, we can do 3.3 and 6. That. We'll set this, and then 114. There we go. Add liquidity like that. So this is close to, if not like a little bit less actually, since we couldn't put all of our wax into this. But we initially had 0.06% of the entire liquidity pool. Now we have 0.09%. So this is almost 50% more liquidity exposure than we had before, just by adjusting our ranges a little bit like this. So now we should earn, whatever yield we were earning before, 50% more than that, because now we're 50% higher ownership stake in this pool. So we've tightened our liquidity on this, and we're going to keep the rest of this running. I also swapped a little bit of wax into USDT. That way, if we do start selling off, because we were looking at the charts looking kind of bearish in the coming week, then some of this USDT we just bought we'll use to buy back the wax cheaper, and we should end up with more wax. So that'll actually play in our favor. And if it starts to climb again, then we have between here and 41% higher price to be selling into wax, or selling our wax into USDT, and staying within this trading range, earning fees. So this is pretty great. Let's leave this alone. Next, I want to check over on Taco Swap. We had 100 wax in the wax Wombat pool, and I think 36 wax in the NFTV Novo token pool. So it looks like our 100 wax is still 100 wax. 100, so 50 bilateral, and then here we have 1182, which I think that's also close still to 36. Let me do the math really quick here. If I do an NFTV token, NFTV, and into wax, and we do 11.8, yeah, 15. So that's about 30 bilateral then. So 12.82. Yeah, so it's maybe slightly less than we started with, but it's still close to what we put in as far as the wax value of that is. And then, of course, if we come here to claim our rewards, we've been earning some NFTV tokens and some Wombat tokens. So let's claim both of those before we move on into the next section that we want to go into. And sign this. Boom. Okay, so we've claimed the rewards. Ooh, nice. Walk says I can now revert the charts if I click on the symbol. So here we go. Let's see. That will be, hold on, symbol on the top left of the chart. Oh, it's probably up here. Hold on. The glare is so fucking bad right now. Here it is. I'm curious. So we're looking at wax. Oh, I should probably refresh too, because we not have 100 wax right now in our wallet. But yeah, the charts here are getting more and more like badass. I really like wax on edge. I'm actually going to use this to claim our rewards. So I'm going to toggle wax to be my receiving token, and I'm going to use this to sell the Wombat and the NFTV tokens that we've earned this past week. A big part of that is, let's say we are expecting the coming week to be much more bearish. We're like seeing markets are going to turn. DXY is running. Let's expect, the crypto market to kind of sell off a bit. And with that in mind, let's take the rewards we've earned since the last 2 weeks of mining, swap them into USDT, and then use the USDT to create a single-sided liquidity pool, which will buy back wax on the way down. So that's a decent way, I feel like, to deal with the rewards from this past week. And so what I'm going to do is I'm going to start here on Wax on Edge by swapping our Wombat and our NFTV token into USDT. So I can get that route happening, automatically over here. So let's do it from here. So we already have 31 cents. Not bad. We can add another 10 to that. And here's the route. We're going Wombat to Wax on Taco, and then Wax to USDT on Alcor. It's a nice little joint effort between the two pools. So let's do this, and then I'll do the NFTV token as well. And then we should have a few cents worth of USDT from our rewards this past couple weeks that we can then use to buy back Wax. And so let's do that. Let's do the NFTV, and then maybe I'll do a little bit of housekeeping because I see there's a few other tokens in this wallet that I could maybe do a swap and get a few more USDT tokens. So there we go, another 13 cents worth of USDT. We'll do that swap there. Boom. Swapped. And then let's see, I think we saw some, let's see, looks like I see some honey, not a whole lot, some Novo tokens though. Let's see if we can swap those as well, or if they're worth it anyway. I feel like anything over like 5 cents, and it's slightly over 5, so let's do it. We'll do a quick swap there. Okay, so now we have pulled like what 60 cents or so into our wallet, and that's basically all from like rewards, and I guess half of that, 30 cents of it, was from just overflow from our trade earlier. That didn't make it into the LP so far, but I want to create a new pool to capture the like downside of this. So again, I'm going to do Wax and USDT, but this time I'm doing the same low 3.3, but then instead of 6 here, we'll do the current spot price. So you can see it's about 4 cents. So let's do 4.1, and if we add all of this, it needs barely any Wax, but I want to be entirely asymmetrical. So we'll do it like this. 4.039. The current spot is 4.048. So now here, by creating this pool, it would basically use the USDC that we've just gotten from our rewards, and it'll use it to start buying Wax from 0.22% lower than the current price, and then finish buying the Wax at about 19% below current spot price. So this pool is going to stay in USDT unless the price of Wax falls. If the price of Wax falls, then we'll be using it to buy more Wax, and we'll end up with more Wax than if we had just swapped all of our rewards directly into Wax. And so that was kind of the point of that. If I refresh now, we'll see I have the in-range pool, and then I have a second pool that is now out of range waiting to buy the Wax. So this is kind of like I am expecting the price of Wax to fall. I'd like to buy Wax on the way down, and this is how I'm going to do that. Rather than come here and set a limit order, I'm just going to set a liquidity pool position with asymmetric liquidity. So obviously, if the price falls and then climbs again, then my liquidity pool will buy into Wax as it falls and then sell back out of it as it climbs. So we'll have to see how we've done with this pool this time next week. So that is, I believe, everything we have in this wallet accounted for. So let's do a really quick tally of what we're at now with our Wax here. So this is about 35 Wax. Well, this is about 100. So we'll say about 135 Wax we have on Taco Swap, still farming. And then over here we have, let's see, we have about 114 plus $1.53, which $1.53 we'll have to do some math on. And then I'm actually going to also add the 60 cents we have. So we'll say $3.10 instead of $1.53. We'll say 13. So I'm just adding 60 cents to the 253 to get 313. So 77 Wax equivalent in value in USDT between both these pools, and 114. So we're looking at about 190. Was that 91-ish? Let's say 190 Wax here, along with 134 Wax in the other pool. So we're at almost 320-ish Wax now in our wallet here, having started with only 100 Wax. That's not bad at all. So we've done relatively well keeping up with our with our liquidity pool positions to earn more wax, which was our stated goal with this wallet and this kind of like experience. Dre is asking, is there an EOS USDT pool? Yeah, there is. So if we come up here to analytics, you can see the most active pools are broken down here based on volume. I think they'll organize them based on 24-hour volume, but it's always a good idea to keep an eye on the 24 or the 7-day volume rather, so you can see if the 24-hour volume is actually representative of the full week's performance, or if it's just having a crazy day recently. But you can see that the sixth pool down here is Wax EOS, and the EOS token on Alcor is similar to the USDT token, where if we go to swap, you can see the USDT token is issued by Alcor. So if we go, I guess it's easier to see in wallet. And if we look at, I guess here, here in the wallet, you can actually see it pretty well. You see how like Wax USDC, for example, is ETH token is the issuing authority for this. That means that they're the ones who minted this token. So the USDT token on Alcor is minted by Alcor token. So if I actually, let's see, if I actually had some in my wallet, it'd be easier to show that. So let me just swap these LFG tokens for some USDT just to show it off. This is going to be almost nothing. Oh, it's so almost nothing that it's literally nothing. But yeah, I mean, if we did have some in the wallet, you could see that it's I believe it's token.alcor that issues this one, and that's the same also for the EOS token. So both of the EOS token and the USDT token are minted by Alcor's own wallets and are basically maintained at peg through their backing, which is available in the IBC bridge. So if you come up to the bridge, you can bridge, for example, from Wax to EOS. And if you bridge, here's the tokens you have available to do this bridge. So if you bridge EOS or USDT from Wax, you're going to be sending it the Wax or the EOS or the USDT token that was minted by Alcor, and you'll be redeeming it on the EOS side of things for the actual EOS mainnet token or the native USDT token. So on the EOS side of things, those tokens are actually native assets on the blockchain, whereas on our Wax side here, those tokens are maintained. They're basically wrapped assets that are maintained by Alcor. So keep in mind that that's kind of the thing here. Printing your own money in DeFi helps. Yeah, absolutely. So that's definitely something to keep in mind, is that these tokens are not native stable coins. They are basically representative of wrapped backing assets that is maintained, the security for those bridges is maintained by Alcor. Alcor has a pretty good track record of operating a successful and secure protocol on Wax and on EOS chains. So it's not like necessarily a negative. It's just something to be aware of. But all of that said, you can see that the pool exists for EOS Wax, and you can add liquidity as Wax EOS to farm basically the trade volume between those two. There also will exist there will exist arbitrage opportunities between EOS on EOS blockchain and EOS here. So if we did, for example, 10 EOS on Wax right now into USDT, you can see it's going to give it to us for 5.50. If I swap this over to EOS mainnet and then take a look at 10 EOS into USDT here, 556. So there's a little over 1% arbitrage opportunity at the moment, where I could take 550 Wax. I'm sorry, I could take 550 USDT, bridge it through this bridge into the Wax blockchain, and then you use it to buy EOS tokens on the wax side of things where they're cheaper, and then bridge them back to the EOS side, and you realize the profit between the two by then just selling the tokens back on the EOS mainnet side. So that is kind of like the other side of this. And then now that we're over on EOS, there also exists Wax here. So you can see here's Wax, and you see as actually has like a little sub like circle within the Wax circle. That's because the Wax token on EOS is also minted by Alcor. So again, this is similar to how USDT is maintained by the Alcor bridge, and the Alcor wallets are the ones who mint the USDT on Wax. The Wax token on EOS is minted also by Alcor and is backed by the Wax within the bridge contract. So again, if you bought Wax on EOS, you could use native USDT, for example, buy Wax on EOS, and then bridge the Wax through the bridge here from EOS to Wax. So you can see here, if I did this bridge, I could bridge Wax. And then what I receive on the Wax blockchain is actually native Wax token. So it's not like some wrapped, it's actually the real Wax that you want on the Wax blockchain. But when it's Wax on the EOS blockchain, you should be aware that it is Wax issued by and maintained by Alcor. In the same way, you can bridge the Wombat tokens, and then Wombat token is going to be a bridged asset that is maintained by whoever's the bridging authority, not necessarily a Wombat native asset. Whereas, Wombat is native to EOS, or is native to Wax, since the Wombat team actually issues it on Wax, and it's native to Polygon, and it's native to Ethereum mainnet. It's not native to EOS. So when you hold Wombat token on EOS, just be sure you understand you're holding a wrapped asset that represents ownership of the native asset on another blockchain. And wrapped assets come with the risk of being potentially exploited on a bridge level. So if the backing of the Wax on the Wax blockchain, for example, was removed from this bridge, then the Wax that you can trade over here on the EOS blockchain wouldn't actually be worth anything, because there isn't real Wax to swap it back into. So whenever you hold these bridged assets, you should understand there is that additional risk layer where we now have to trust that the bridge is going to maintain its peg for us. So all the while that we're holding now, if I go jump back over to Wax, the whole time that we're holding our USDT here in this liquidity pool, we are exposed to the risk of that bridge security. And if for whatever reason there is an exploit on the EOS side of things, and the USDT, the native USDT on EOS, is somehow stolen from Alcor, that will affect the value of USDT tokens within these liquidity pools, because they'll no longer be able to be redeemed for native USDT. And then I'm sure you've noticed, if you've messed around with the tokens on here, if you just type in USDT, there is also a Wax USDT, and you can see this one is EOS.tokens is the issuer of this one. And then I think there's another one that's issued by like one of these is issued by like the gambling like website that lets you bridge it, and so they have their own bridge, and so they issue it on Wax as well. But this one, for example, the Wax USDT, that is a native Ethereum mainnet USDT, and that is issued by EOS.token. This is a Wax core team wallet, so they actually maintain the bridge. And obviously there is a counterpart to all of this Wax USDT over on the Ethereum mainnet, and that also is vulnerable to potentially being stolen. That is kind of what you see a lot of DeFi hacks target bridges and the bridge backing assets, because there's effectively like a giant pool of assets here waiting to be stolen. And so if the security isn't top notch and the bridge is exploited, then all of the subsequent issued tokens that rely on that mainnet asset being there to be redeemable, those assets then would lose their peg and no longer be redeemable, and therefore lose their value. So it's definitely so is it's safe to hold your wax in EOS. So it's as safe as the bridge contract itself. So I would say it's relatively safe, but it's safer to hold wax on wax native token. So holding wax on the wax blockchain is absolutely safer than holding wax on the EOS blockchain, because when you hold wax on the wax blockchain, you hold native wax asset tokens, and there is no counterpart that could be exploited. So if you're holding your wax on the wax blockchain and then the EOS wax token bridge is exploited and the wax counterpart is stolen, the wax that you have in your wallet won't be affected by that, because the wax that you have in your wallet is still native wax. Whereas if you're holding wax on EOS chain and that same event happens, the wax in your EOS wallet is affected by that, because it now no longer can be turned into native wax. Whereas, native wax can always be used as native wax. So there, you basically, by holding the token in its native chain, you are avoiding that exposure to that risk. However, holding wax on EOS chain definitely opens up the opportunity to trade or participate in the liquidity markets on EOS. So if we come to EOS and look at analytics here, you can actually see, EOS and wax is a pretty top pool here. You can see it is moving. It's the third most active liquidity pool on the Alcor EOS side, and so you can participate in this, or even EOS USDT. So these are both native assets actually, but this is native EOS and bridged wax, and so you can earn the liquidity yield from this pool, but you would be exposed to potentially the security issues that could come with the bridge being exploited. So far there has not been a history of bridges exploited in the IBC system, so the inter-blockchain connectivity format here that this bridge uses, the IBC bridge. There isn't any history on Alcor being exploited. Alcor's also maintains their smart contracts for all the swap activity on both these blockchains and have not been exploited since their inception. So they do have a pretty good track record of keeping good operational security, but that doesn't mean that the risk isn't real or isn't there still. So ultimately, it is always safest to hold native assets. And that's kind of why news like Circle making USDC native to the base blockchain is like relatively big news, because it means that, you no longer have to hold USDC that is wrapped in from Ethereum mainnet or something along those lines. Now there is a native option that doesn't have this exposure to the bridge environment. And like I said, a majority of the large scale DeFi hacks involve bridges. So it's always safest to stay in native assets. The IBC is also going to be the protocol that you use to basically spin up side chains on Wax. So in the future, when let's say Alien World runs on its own side chain, that side chain would basically, you would take your TLM or your Wax or whatever, even your NFTs potentially, and you would bridge them into the Alien World's roll up, and then you would do whatever you want on that side chain for basically consolidating all those transactions, so that they no longer all have to hit the mainnet of Wax, and it can scale the throughput of the amount of transactions a little bit more successfully. And then you would bridge the stuff out of the game when you're done playing back to the mainnet, and effectively have all of your gaming transactions taking place on a layer 2. That's all going to be facilitated through the same technology here, the IBC. So in the future, the IBC is definitely going to, hold a lot more of these kind of wrapped assets, because a lot of it is going to, take your mainnet assets, wrap them into a game position, let you play the game, and then unwrap them back out when you're finished playing, versus, doing everything on chain directly. So it's definitely an interesting infrastructure to keep an eye on and to monitor to see how secure it is, especially now that people are using it for EOS wrapping, for USDT bridging, and for Wax kind of like bridging between both these chains. Yeah, the Farmers World sidechain, exactly. We'll see if they actually get around to that. I don't know if is Farmers World still like actively developing their roll up, or is that just wishful thinking at this point? I feel like they've kind of fucked off. But yeah, that is basically, when we look at like the Wax blockchain activity, and we can see that, like, okay, 90% or whatever of all of the transactions on chain are coming from farmers worlds or coming from alien worlds, and then that amount of traffic means that I, as a someone who just wants to buy and sell NFTs on NFT Hive or Atomic Hub or NFT blocks, I now need a higher share of CPU just to have the resources to broadcast transactions to compete with all this volume that's being pushed onto the mainnet. All of that volume could effectively be packaged into a side chain and removed from the mainnet, which would, as an end user of Wax, mean that my 100 Wax stake to my wallet, for example, will actually go a lot further in affording me on-chain transactions. So, like, for example, we were playing like, oh, what was the name of the game uh with the black hole token? I've been playing that one a little bit here. It's like TFMW. Yeah, Terraformers. That was it. So, like, Terraformers, when you play, like, all the way through one of those mazes, for example, it can be quite a bit of transactions, and those transactions, depending on how active the Wax blockchain is on that day, can start costing you quite a bit of CPU. And the nice thing would be, ultimately in the future, it would be possible for, if I go here and say start a game, that game itself could roll up into a side chain, and then I could, continue to like do every single transaction, but with minimal CPU expenditure, because all of it would happen effectively off chain but on a side chain. And then once I get all the way through my maze to the end and I say, end game, then it could roll all of those transactions down back to the Wax mainnet and effectively log them all as a single transaction. So then, compartmentalizing all of that gameplay into like two transactions on mainnet, the same way you could do, like, a full day of mining in alien worlds where you're clicking mine every 5 minutes. All of that can be done on a roll up, and then, basically when you're ready to like cash out, or when you're ready to like, transfer yourself the TLM, then it can be put back down to the mainnet to verify basically the authenticity of your actions in game, and then give you the payout. So that's, like I said, that's something I'm very interested in keeping my eye on. This is also super useful to know that is how the IBC is going to be developing further. And so here we go. And so that's also why I like to like keep track of if there is exploits with this kind of technology at the moment. Let's be aware of them, so that if there are these exploits, then I know that, okay, maybe I am not ready to participate in a roll up, or I feel like maybe I want to, I don't want to hold all my Wax on EOS, because I understand that the EOS Wax token has this exposure to the bridge, and the bridge itself has potential vulnerabilities. But like I said, we haven't seen those exploits happening on the IBC. There is a lot of exploits in DeFi happening all the time. So like, I'm not saying it can't happen. I'm saying there is a solid track record so far of them not happening. For Let's see. Wapaka says a sidechain would be really useful to Terraform, since it uses almost a second of CPU per game. Yeah, exactly. And that's the cool thing about where we can, if you used a sidechain for terraformers, you could basically compartmentalize a full game into one transaction versus that full second of CPU time that it requires to log all of those transactions and each one of those moves. Then the IBC can spin up basically a side chain just for your game, and once your game is concluded, it can spin back down to the mainnet, and that really helps the throughput metrics of Wax as a whole blockchain. So then you can have a million bot farms running, and everybody transacting on the marketplace, and all this stuff can all be like spun up and spun down appropriately to keep the throughput threshold continuously like maintainable effectively. And that is happening in Ethereum lately. So if you've been paying attention to the Ethereum gas fees, I think like the last week or so, the average gas fee on Ethereum has reached the lowest point it's been in over 2 years. So the on-chain transactions on ETH have become cheaper than they've been over the last multiple years. But at the same time, the amount of total transactions on the EVM, so not just on ETH mainnet, but ETH and all of its side chains, all of its layer twos, has also made a new all-time high. So we're getting all-time low transaction costs and all-time high transactions pushed to the network. So that is scaling in action. So you can see all these layer twos that Ethereum now has. The really big notable ones lately, I would say, are like Optimism, Arbitrum. You have like the base blockchain. I guess we could really quickly poke around and see like DeFi Llama will show us pretty good DeFi Llama. DeFi Llama. Let's see really quick what the different chains are looking like. So if I come here and just click chains on the left, we can see like the biggest chains basically by volume and by TVL. And so right now, Ethereum mainnet, biggest chain, Tron. I'm not a big fan of Tron. Tron is a basically Justin Sun's owned chain. It's like him and CZ from Binance kind of like use this chain as their piggy bank. I'm a little weary about some of this stuff on this chain. I don't really trust their TVL metric here, $5 billion. BSC, though, this is definitely a layer 2 for Ethereum. This is Binance Smart Chain. So there's Arbitrum, Polygon's another big one, Optimism, Avalanche, Base. So these are all like roll-ups of Solana is the first one here that's not a roll-up of Ethereum. But it's like a parallel to Ethereum. It's like a sister chain almost, I would say. But it's more of a private kind of a VC run chain. I'm not the biggest fan of Solana either. But, most of these, like Base, I'm actually come to kind of like quite a bit. Avalanche, also lots of VC funding, but relatively functional chain. Optimism is a big proponent of like open source code, public rollups. Optimism is also the foundation of what Base Chain is built on. So Base Chain is basically just an Optimism implementation with like a few adjustments and different node operators basically. Same with Arbitrum. Arbitrum and Optimism are functionally very similar. And then you have Polygon, which is Matic chain. That's another layer 2 on top, like a DeFi layer 2. But either way, all of these chains put together basically operate in a way where like all the transactions you make on Polygon or on Arbitrum or on definitely on Arbitrum, Optimism, and Base Swap or Base Chain, they all will run within their own ecosystem, but then publish all of what is happening in that ecosystem to the Ethereum mainnet, which facilitates a much larger amount of transaction throughput while maintaining a much lower cost per transaction on Ethereum. So that's exactly why this past week we're seeing all-time high number of total transactions coming through the Ethereum virtual machine, while at the same time all-time low, well, not all-time low, but long-time low fees being paid for Ethereum transactions. So the gas cost on Ethereum is going down, while the ability for the network itself to handle more and more transactions is going up. So this kind of a roll-up thing does seem to be working in practice. So it's kind of exciting. So really dope. Let's see. Side chains would be really useful. Yes. Is there a whole ZK roll-up stuff? Yes. Sending single transactions at one. Exactly. That's basically what this is, Monasuerte, is like a lot of these. So ZK rollup is ZK stands for zero knowledge. But it's basically ZK rollup is like a little bit of a built on top of what this is. So Optimism, Arbitrum, and like Base Chains, those are like rollups, not zero knowledge rollups. ZK rollups are basically the same thing, but with an added privacy element to them, so that the transactions that you're making within this rollup chain can be obscured from people monitoring them, and it can be entirely private. So the end-to-end transaction, when you read the blockchain, it will tell you, how much token was transacted, but not necessarily from what wallet to what wallet, or which parties were involved. And so on the back end, ZK rollups, or zero knowledge rollups, are a way for you to not only scale the Ethereum blockchain throughput, but also add a layer of privacy on top of that scaling. So that's a big, like, ZK Sync. It was like a big, well, here's ZK Sync era. This is a relatively big ZK proponent rollup. And then you have Polygon has a ZK version of its EVM infrastructure, so you can use ZK Matic, which is, again, it's basically Matic is already a rollup. ZK Matic is again the same rollup, but with that privacy layer. So you would actually bridge your assets into the ZK version of the blockchain to use it more privately. I'm a big fan of privacy stuff. Honestly, I think it's not a bad idea to keep some of the information that is available in blockchain private, especially when it comes to institutional traders or big institutional companies deploying their stuff on this blockchain. They're not necessarily in the business of advertising or broadcasting publicly to everybody what they do with their money, and so it makes sense for these ZK kind of solutions to gain traction. My biggest grievance about the ZK rollup system is that it's really complicated math that I have a hard time understanding personally. And so then we've come to this issue of, like, I have to trust that the math works because I don't actually personally understand it myself. And so the ZK kind of rollup system feels more like a trusted system to me because, again, I can't verify so easily how everything is working because the math is a little bit over my head, and I imagine over a lot of people's heads. And so that kind of you know is it's a hard, I don't know, it's a hard, like, weird line to, like, draw, but it's like privacy is good, but it needs to be privacy that is also simple to the point where anyone can still vet it without, like, an advanced mathematics degree. And zero knowledge proofs, which is the foundation of ZK rollups, are really complicated math formulas. And I understand conceptually how they work, but I don't understand how to vet them personally. And that's kind of more of I'm not the biggest fan of that. And I actually really like the tumbling solution to privacy, which is kind of like how Tornado Cash does it, which, again, Tornado Cash has a really bad rep because Tornado Cash is the tumbler that most of these hackers use to obscure their transaction histories. But what it does is basically you can take one wallet, let's say with like one Ethereum in it, and then it'll split that one Ethereum into like 100 wallets by giving each of them like 1/100th of an Ethereum, and then like basically recompile those transactions back. And so you get back on the other end one Ethereum, but the transaction history of that one Ethereum has now been split up and mixed around so much that it's much harder for someone monitoring this to draw a straight line between the source and the origin of those tokens and their current ownership. And that's what hackers really like, that because then they can steal from a protocol and obscure the history of those stolen assets so that when they deposit them into centralized exchanges, the centralized exchange won't raise a red flag and be like, hey, this you stole this from this protocol, because it won't be quite as simple for them to kind of draw the line back. On Ethereum, that is obviously problematic, and the protocol itself, the Tornado Cash protocol, is sanctioned by the United States government to the point where if you were to deposit Ethereum into your Coinbase or your Gemini or your Kraken account, they might freeze your account if that Ethereum came from the Tornado Cash tumbler. It's also a pretty good way to verify that if there's a new DEX or a new lending protocol out there that's just launching and suddenly has all of this influx of capital, you can verify where did the capital come from, and if that capital came through through the tumblers at Tornado Cash, for example, that's a pretty good red flag to be like, oh, the source of this money is likely criminal. And so that's kind of it's a solution to privacy, but also by using the solution, you're basically outing yourself as someone who is a bad actor. And so I really like the concept of like a hybrid system where, like, for example, I really like the way Decred handles it, where they have a proof of stake voting system where when when you stake your token, so if we consider this similar to wax, for example, when you stake your wax, you're staking your wax to, like EOS dot stake or whatever the wallet is, right? And then the way that like Decred's privacy works is they literally just do the similar thing to Tornado Cash. They just tumble those transactions, but instead of it only being funds that people are committing to the tumbler, it's those funds plus all of the staked tokens. So anybody who ever participates in the staking process is also participating in the transaction obscuring history. And so, staking into the network and then unstaking again basically wipes the history of your coins. And so that approach, so that basically I'm saying there is approaches that can integrate more into a blockchain, like on a blockchain operational level, like for example, integrating into the staking contracts, for example, to still use very simple mathematical formulas like tumbling, and basically just expand the pool of assets being tumbled to include not only illicit funds, but also, all of the staking funds or something like that. And that way, the math and the verification process for the privacy aspect is still very accessible and understandable by most people, while the effectiveness of the privacy is quite high because, at any given time, there's 60+% of all the tokens in the network are staked, meaning that 60% of all the tokens participate in this obscuring of the transaction history. So it would be effectively the same to somebody who's doing like analytics on your wallet, would basically see, okay, or would have a hard time telling the difference between like you staked these tokens and unstaked them versus you tumbled these tokens to obscure the history. And that's always interesting. I really like that kind of a thing. Let's see. We need a red flag emote. Yeah. More red flags than Minesweeper, baby. I always like that. Tumblr, Tornado, yeah. Synonyms sound like synonyms to laundering money. Yeah, kind of. I do agree. There is like a lot of people will argue that, privacy benefits bad actors. And that's not wrong. It definitely does. But at the same time, I don't know, you can also make the argument that privacy is a human right, and it's not really anybody's business to know like where your money comes from. Like, it's up to you to disclose that, not necessarily up to anybody to be able to figure that out. And to that same end, I would say it's kind of like, a strange phenomenon in our culture to publish like Forbes top richest people lists like that. That's relatively private information. It's always really strange to see how okay we are as a society with being like, hey, this is how much this person has, or this is how much these people got paid to act in this movie, or those things like that. That isn't necessarily like anybody's business, but there's definitely like philosophical and ethical arguments that get raised by the approaches to privacy. That's for sure. Let's see, vote vote on Wax for new emotes. Yeah, that'll be fun. I have to talk to Lewis about it. Yeah, it's true. It works one way and hurts the other way. Like, I'm cool if the government doesn't know what I have, but not cool if someone to steal it and easily get away. Yes, that's exactly it. And then especially with government and like public figures, like, I would be less cool with those people using obscuring technology or like ways to hide their money. If they're public, then you should use the public channels of these public networks. But if it's a private business or a private individual whose assets are in their own wallet, then I'm a little bit more okay with people like being private and keeping their, transaction histories secret, because that is their own business. But when my politician is getting donations from God knows where, I would prefer to know where those come from before I have to vote for them. And so, there is part of this crypto technology makes it very simple to make all those transaction histories public, while the other part of it does offer the opportunity to be participating in this in a zero knowledge kind of way where it is very private. And it definitely requires like nuance, and I think some legislation needs to be passed or at least clarified to let us know how to approach this privacy technology without it, obviously without it being like, oh, anyone who uses this is now a criminal, because there is absolutely that aspect to it, because there is, you know a legitimate person could use Tornado Cash to tumble their Ethereum, but by doing so they've effectively become an illegitimate person, and that is not necessarily a good thing. Just because you've used this protocol that is also used for nefarious reasons doesn't mean that your reason was nefarious. But yeah, it's like I said, it's nuanced, it's not so straightforward. And it's nice, uh it would be nice, I guess, to have a little bit more legislative clarity on how to approach something privately versus publicly, and when to opt into or out of those procedures. But all of that said, I did want to just poke into this today a little bit. Unfortunately, I don't have my co-host Lewis, and I'm really bad at fucking like rating people and stuff. But let's take a like last look here at the wax market. So we are looking for wax to potentially continue. This is the daily chart, right? We're plenty of room down for the next day, and we are definitely, I imagine, going to sell down and at least come and retest the strength band down here, which is going to be around 3 point, let's say 8 or so. So we do have our range all the way down to 3.6, so we should be good to go. And moving into next week, I should have, if we come to pools, I do have now here my still out of range liquidity position, where we were at 0.22 cents. You can see we're actually a little bit almost in range now. But if the wax price keeps selling off, then we should be buying some more wax here, 61 cents worth, but over the course of about 18% worth of spread. So we've set up ourselves to capitalize on the way down for the coming week. We're keeping our in-range liquidity here, which also takes us to the same level, about 18% below current spot. But if we do move the other direction, we have 40% leeway here to sell off some of this wax into USDT, and then obviously have some USDT to hopefully buy back cheaper as the wax price chills out again. We do expect, or I do expect, to see the markets kind of cooling off in the coming days. Big portion of that is going to be influenced here by our DXY. So we're looking at the daily chart. It's definitely kind of running up here, blowing off, and that is going to push down our SPY here. So that's the S&P 500. The QQQ is the NASDAQ, also pushing down here. You can even see here we got our, on the daily, we got our bear. We retested right to the band. We got a little deviation above it, but basically rejected. And now we're pushing down and starting to make a lower low, it looks like. There is a very clear on the SPY, actually. We can see kind of a like a head and shoulders pattern on the weekly chart, I believe. It's actually easier to see on the daily, where you would see this section being shoulder 1, this section being head, and this section being shoulder 2. So you'd be like basically coming up, down, up higher for the head, down, up to about the same height as the previous shoulder, maybe a little bit halfway between that. So it doesn't have to be exactly even to be considered head and shoulders. And then moving down. Let me see if I can actually find a more like a textbook example of what the head and shoulder pattern looks like, so that we can not just look at it. Here we go. I'll bring this guy up, and I can bring up the S&P 500, the same chart that I'm looking at right now, with a little bit more of a like drawn out. So this is the textbook version of what a head and shoulders pattern is. You see the market coming up, and then here we go, peaking, shoulder one. This is the head. This is shoulder two. And then you would say the bottom here would be the neckline. And then where shoulder two starts to fall below the neckline, then you're looking for a target sell off all the way down, which matches the same length as your neck to your head. And so if we look at that, but drawn here onto the S&P 500 chart, which is, oh, you know what? I feel like I am not sharing the right browser for this. Hold on one second. Let me pull these up into copy. Yeah, I definitely wasn't sharing the right browser for this. Okay, so let me pull this up. This is the textbook example of a head and shoulders pattern. And then this is kind of the market that we're looking at here, the S&P 500. So that's the S&P 500, the SPY. And now I can pull up the SPY with the head and shoulders pattern like this. So you can see this is, again, head and shoulders pattern. When you're looking at a head and shoulders pattern, it's a technical analysis kind of like trend, which is characterized by these three peaks, and the three peaks kind of coming to a point like this, forming this neckline, and then the top peak or the head peak to that neckline is going to give us the range for our target for falling below. So you can see if we're looking here, this is what I was looking at, like around here. This is the S&P 500, and then here I have it drawn out. This is the head and shoulder pattern on that chart, where you can see shoulder one, head, shoulder two. This is our neckline, and you can see we're losing that now, meaning that we're now looking for a drop that is equivalent to the top of this candle to the neckline from the neckline down. So this blue line here, same length as this one. And so we are looking for this S&P to sell back off down to about here, which if we're looking at our current chart, that's going to be down to about here, which is also where we found quite a bit of support. So we would basically be able to, let's do a horizontal line. A horizontal line, probably something like this. So yeah, somewhere around here is probably where we're going to look to find some support, probably bounce. But it does look like we have a little bit of a head and shoulders pattern playing out here in the market. And as that's playing out, let's assume that the crypto markets will fall off as well. So yeah, that's everything I wanted to cover today. So thanks for joining me. Sorry, it's been just kind of like tech heavy. I didn't have Lewis to help me with the music or the giveaways this time, but we'll definitely be back on Thursday and Friday this week to kind of like jump back into our normal streams. I've been getting back into the rhythm here after recovering from COVID, for which kind of wiped me out, honestly, for the last few weeks. But yeah, thanks again for joining me, guys. It's I wanted to like pop in on this stuff and take a look just to see where do we want to move our crypto positions around, how have they been faring, and also why are we expecting the markets to keep moving down. And so I kind of wanted to touch on all of those points before next week, I guess, so that we can take a moment to adjust some of our positions and also to check on how they've been doing. I got to say, I am actually really happy with the way that these two pools have been performing. Last thing I want to do is actually, let's see how they're still playing out. We want to make sure we have runway left for the week. And we do, 56 days and 71 days. And you can see we're still, earning 163% in this one and 65% here in the Wombat pool. So these are both still very viable options for us to continue to farm. And we don't need to hedge too aggressively because we have already a relatively solid hedge plan over here with are Wax and USDT. So as you know, we keep falling, we should find some support at least around 3.8 or so, but we've given ourselves rooms down to 3.3, and so this is going to basically be our hedge plan. If Wax keeps selling off, we're going to be buying more, and we should get a pretty good performance out of these pools if that keeps happening next week. So let's check back in on this in a week, and until then, I think I'll try to do a raid, but we'll see if I can. But until then, thanks again for joining me, guys. I wanted to just poke in on this stuff. I know normally I have normally it's me and Lewis, and it's a little easier to kind of like go over everything, monitor the chat, and do everything together. So thanks for bearing with me, and hopefully it wasn't just too monotone talking at you here. But I did want to cover a decent amount of like what I was seeing in the markets in this last couple weeks and how I want to adjust our positions to do so. Wapaka, thanks for joining, man. I fucking, as always, shout out to Wax on Edge. That tool fucking rocks. It's still super, super useful. So anytime I'm trading, like selling off my yield from my positions, Wax on Edge is definitely coming in handy. So shout out to you, man, as usual. But yeah, until next time, guys, thanks so much for joining me. And I wish I had a little song to play us out, but since Lewis is on set today, we'll just have to imagine buying the dip in our heads. Oh my God, what's happening? All right. See you guys next time. Thanks for joining, and thanks for voting on the Saturday here. Oh, I'm sorry, on Sunday for your boys' weird arguments on on farts and on soup and on the top floor of office buildings being reserved for CEOs. We kind of rocked it, so I appreciate all the support there, and we'll see you guys next time. Thanks for joining. Bye. Let's see. I'm gonna come